All right, everyone. Thanks again for joining this webinar. Of course, we are covering the Israeli-Iranian conflict today. My name is Ray Anson. I'm a senior economist here at Kepler. I will be moderating this discussion. We're going to keep this webinar really tight to 30 minutes. So we're going to have about 15 minutes of going through some slides and commentary, and then about 15 minutes of questions. Today, I'm joined by my colleagues, Amina and Hamayun. Amina is head of OPEC analysis here at Kepler, and of course, Hamayun is head of crude oil analysis. Without further ado, I'm going to go ahead and pass it off to Amina to begin with her commentary.
Thank you so much, Reed, and thank you for everybody that's joining us today. I know that it's been a very, very busy day. We've all been monitoring what's happening blow by blow. And here at Kepler, we're really keen to tell you what the impact of all of this is on energy markets and oil more specifically. So what happened here, I mean, this escalation is not something to be taken lightly. This is a really big escalation and something that we haven't seen happen since the 1980s war between Iran and Iraq. So it's quite significant. And so far, I mean, there hasn't been an impact in terms of taking supply off of the market. And I'm talking about oil supplies here. Iranian facilities, and we checked with our sources on the ground there, have not been hit by any of the strikes. So the strikes mainly targeted nuclear sites, they targeted missile making factories, they've targeted heads of leadership in the Iranian Guard and nuclear scientists. But so far on the oil front, we are not seeing any damage to infrastructure or fields or facilities. So that's one part of it. But of course, oil prices reacted. You have a geopolitical risk here, which I think the market has been ignoring for quite some time and suddenly woke up to it, that we are facing the possibility of a risk of a supply loss. Now, the extreme scenario, whenever we talk about Iran and a conflict in Iran, is the closure of the Strait of Hormuz. We still think that's very unlikely. We've been monitoring the Strait quite closely with our data team, and I can report to you that it's business as usual for now. We're not seeing any changes in the traffic at the Strait of Hormuz. Can this change? I mean, given how volatile the situation is, and I don't expect things to calm down. On the contrary, they seem to be escalating. There were supposed to be nuclear talks between Iran and the US to be held in Oman on Sunday. That's no longer happening. The Iranians said that they will not be attending this meeting. Sitting here in Dubai, I can tell you that there are a lot of de-escalation efforts being done by the leadership in the UAE, Saudi Arabia, Oman. Nobody wants to see a war in this region. So these calls are ongoing. And of course, I mean, it opens up always, brings us back to the memory of 2019, where Aramco's facilities were targeted and we lost 50% of capacity. But I think the situation now is a little bit different. I know that this is a risk that we need to bring up. What if Iran starts targeting other facilities in the region, feeling cornered that it can't do anything with its current military capabilities or through proxies and so on? Could there be a risk to facilities in the Gulf region? Yes, the risk is present, but I think we're at a different time now. Saudi Arabia does have diplomatic ties with Iran. And I think, I mean, the constant dialogue that I'm seeing between the Saudi foreign minister and the Iranians, it really puts me a little bit at ease that there won't be that type of risk right now. On the OPEC front, we just put out a note, by the way. If you're a member of our Insights subscription, you could read our full note covering all the major questions. But on the OPEC front, the questions are always, when will OPEC act? Is OPEC worried about prices going up by $5? And the quick answer to that is that the oil price is jumping because of a geopolitical risk that OPEC Plus can't control. It's not because there's a change in supply. And only if there's a change in supply, and if we see a loss of Iranian barrels or barrels from anywhere in the world, this is when the group would step in and add more supply. And among the OPEC group, we still have a cushion of around 6 million barrels a day of spare capacity that could be tapped into. And we'll get into all the details when I hand it over right now to my colleague Hamayoun.
Yeah, thank you, Amina, for all this. So, I mean, let's go to just check a few numbers so that everyone attending this webinar understands how high the stakes are. And so let's just go through a few slides looking at some of the numbers, some of the data, and understand what could happen, what could, what the next step could potentially be. As Amina said, the attacks this last night, this morning, took place on nuclear facilities and military sites, and also at homes of some top Iranian commanders. And when I say top, I must say that Israel has been very successful in killing uh, the most important commanders in the RRGC. So the top three have been killed with this attack this morning. But no, so far again, there has been no attack on oil and gas facilities. Actually, operations are going continuing as normal, and we could be expecting them to actually continue as normal. So there is no supply disruption as of now. Now, let's take a closer look at the situation there right here, right now. So you can look at Iran's oil exports on the left. So you see it was severely impacted by sanctions. Iran managed to increase its exports significantly over the past few years. You can see that all the barrels literally are going to China now. We're not yet back to the pre-sanctions situation of above 2 million barrels per day. That said, we're very high. The average is 1.6, 1.7 million barrels per day so far this year. And actually, the 10-day average, if you look at just the past 10 days, it's not too significant, but you look at the average over the past 10 days, the average exports reached 2.4 million barrels per day, so even above the pre-sanctions level. Now, it doesn't mean that on a monthly average we should stay there. We actually expect them to come down. Now, you look at the right chart, this shows you our expectation for crude oil production. We still expect crude oil production from Iran to drop. Now, this is not even linked to the military actions from yesterday. It's really down to sanctions from the US on the logistics, on the middlemen transporting those volumes of Iranian crude to Asia, and on directly the buyers of some of the buyers of Iranian oil. So we have seen 3 teapot refineries so far in China being sanctioned directly. So we do still expect a drop in Iranian production of about 350,000 barrels per day compared to where we are now. Again, this is not linked to the current military actions. If you look at it from the Chinese side, the state-owned companies in China are not buying Iranian crude. It's really down to the teapot refineries, which you can see here. So on the left chart, you can see the levels of Iranian arrivals, discharges into China. You can see that there's been quite a big drop recently. So the month of May, so less than 1 million barrels per day of oil arrivals in China. So we're starting to see the cracks and the impacts of that sanctions tightening from the US on Iran's exports. And we should be expecting that new average. I mean, again, 1 month is not too significant, but the 3-month average in arrivals into China has dropped from 1.6 to 1.2 million barrels per day. So that could be kind of the new normal. Unless there's a further escalation and facilities actually get hit. And the right chart shows you the prices of Iran light compared to some of its competitors, medium sweet, medium sour oil in Eastern Asia. And you understand why these Chinese refiners, the independents, are going for Iranian crude. It's really down to the prices. The prices are about $6-7 cheaper than the competition. You see the refining margins for these teapots on average, it's around $8. So that's very significant. And if they don't have access to Iranian crude, then obviously the rest of their operations are actually at risk. So Chinese demand is going to stay there, even though there is again an impact from sanctions. So that divergence, between high exports, because exports have remained high, and the lower imports into China has meant that more and more vessels are being used as floating storage. You can see that on the left chart. This shows you floating storage, Iranian oil in floating storage, and there's been a big rise, sharp rise over the past 2 3 months, and mainly in the Yellow Sea near China. So a lot of these tankers are just waiting, to clear, to discharge their volumes into China. It's also down to the Chinese onshore inventories situation, which has hit a new all-time high this week at more than 1.1 billion barrels, and that's including, in Shandong, in the province which is the main taker of Iranian crude. So some of these vessels are simply waiting for those inventories to slightly drop in China before finding some room to be discharged. But we think again that if you remember the first chart on showing production, we think production will be impacted because of that situation on floating storage, kind of unsustainable in the longer term. And also, if you look at the right chart, this shows you the main tankers involved in transporting Iranian oil over the past few months in 2025 year to date. And you can see that there's only about a quarter of them left to be sanctioned. And if you look at that, that count, 44 vessels remaining to be sanctioned, about half of them joined that business of transporting Iranian oil this year. So it shows that Iran's resilience when it comes to sanctions is very strong and should remain strong. But it also shows that there is now a more and more limited pool of vessels and tankers, and potentially that situation that we see in the rising risks, geopolitical risks, could even further away, mean that some of those vessels would not be willing to join that business anymore. So those limitations, the freight limitations, really, and the slightly lower appetite from Chinese refiners mean that we believe Iran's production would be dropping, even if there is no attack on the oil and gas facilities. Now, again, these facilities have been spared so far. But if you look at where Iran is exporting its oil, there is one clear target that would make it very easy if Israel or the US wanted to actually impact Iran's oil exports, and this is Kharg Island. You can see on the left chart. This shows you the exports by port of origin, and I'm sorry, I don't know why, but the legend is not showing all the ports, but the main ones are there. You can see Kharg Island, responsible for about 96% of all oil exports from Iran. So I'm really talking about crude, not looking at products. So any attack on Kharg Island, which is located, as you can see on the map on the right, in the north of the Gulf, would very significantly impact Iran's loading operations. Now, that said, again, we don't think that the likelihood of an attack on Kharg Island or on other installations. You see some of the main oil installations here on the right, and gas installations, and also nuclear facilities. So the map on the right, you can see that the oil and gas operations are mainly concentrated in the south of the country. You can see the oil fields in green, the gas fields in red. So it's really the southwest of the country, which is responsible for nearly 95% of the country's oil production. On the gas as well, you can see the big bubble here in the Gulf between Iran and Qatar. This shows you the Pars gas field. This is responsible for the 3/4 of Iran's gas production. Now, Iran is actually a very large gas producer. It is the third largest gas producer globally, but nearly all of that gas, about 95% of that gas, is consumed domestically. So any impact, any hit on Pars facilities, which gas gets processed at Asalouye and Kangan, you can see that onshore, so those two main ports onshore. Any impact there would significantly also impact Iran's gas production, which would significantly impact its power generation needs. And gas is also very important for the industries in the country, and also residential. And the residential sector is about 1/3 of the total gas consumption in the country. So there is simply a few targets which would significantly rise the escalation here. Again, we're not there yet. And I don't think that in the short term we should get there. I think it remains limited to a constraint to military sites and nuclear sites. But if the situation were to escalate, there's simply a handful of facilities that could get hit and that would already have a very significant impact. My colleague Amina was speaking about the Strait of Hormuz, and obviously you look at the share of oil passing via the Strait of Hormuz, and it's extremely significant. If you look at the total volumes of seaborne traded oil globally, it's about 1/3, 34% to be more correct, that passes by the Strait of Hormuz every day. So it's nearly 15 million barrels every day. You can see the breakdown here by country of origin. Now, some of these countries would be able to bypass the Strait of Hormuz. Saudi Arabia, for instance, has a 5 million barrels per day petrol line. They call it the East-West petrol line, so which would bring the oil from the eastern region to the west into the Red Sea. The UAE also has the Atqab pipeline, which would bypass the Strait of Hormuz and allow the UAE, Abu Dhabi, to export oil from the port of Fujairah. But you see that nevertheless, even if the Strait of Hormuz is closed for just a few hours, because there is strong military presence from the US in the region, and very likely they would go step in and reopen and securize again the strait. Even if it's just for a few hours, the impact on the market obviously would be extremely significant. And that would be seen in prices. So we'd think, Brent would very easily pass above the $100 per barrel threshold. One key metric to look at is the exports from the port of Josk. You can see that on the left chart. There was only one shipment that took place in October last year. You can see that in red. And that's very significant because that port is the first one located outside of the Persian Gulf. You can see that on the map here. It's a new port that has been under construction for the past 2-3 years in Iran, with the goal of having 1 million barrels per day loading capacity. We think that they're not there yet. We think the operations could handle about 300,000 barrels per day. So if you imagine that Kharg Island could get impacted, there's only a very limited volume of oil that would still be able to make it despite the closure of the Strait of Hormuz from Iran, I'm saying. And so the interesting point is that the loading that took place from Josk here took place in early October last year, and that was exactly at the time of the latest attack last year from Israel on Iran's military sites. And so it's the first time that they actually loaded for the first time. Kind of did test operations from the port of Josk. So we could see more loadings then. And if there are more loadings, it could be a sign that Iran is actually worried and concerned and kind of raises the likelihood of a closure of the Strait of Hormuz, but we're not there yet. One final metric to look at and to consider when we come to the potentiality of Israeli attacks on Iran's infrastructure is to look at Israel's own energy infrastructure, and they are also very fragile. It's just a handful, or even less, number of facilities producing gas. You have the Leviathan gas fields and the Karish and Tanin gas fields operated by Energean, so offshore, producing gas offshore. All of the Israeli gas comes from there. And when you look at the oil situation, Israel is not a producer of oil. And actually, if you look at the imports of oil by destination port, you can see that the port of Ashkelon represents more than 90% of Israel's oil imports. So it's true that inventories could mean that Israel could hold up for a period of about 30 days when it comes to oil needs. But the port of Ashkelon could easily be targeted by Iran's military as well. And that's also a reason why we don't think that in the short term, at least, Israel will go for energy facilities in Iran. And the very last slide, looking at spare capacity from the rest of OPEC Plus. Amina, I don't know if you want to retake over from here just to highlight how much volumes they are available here.
Sure. Thank you, Hamayoun. So basically, we're looking at the OPEC group alone. We would have around maybe 6 million barrels of spare capacity, but it's really just important to note that the bulk of the spare capacity lies within the Gulf region. So it lies within this zone of potential conflict. And outside the group, I mean, we always talk about capacity that could be brought on easily, like capacity from Saudi Arabia, UAE, Kuwait, versus other capacity that might take a little bit longer to bring online. So this immediate barrels really come within the region. And that's what kind of puts energy security or oil security at risk when we're talking about any conflict that happens in the Middle East. So we have maybe 15 minutes now to take all of your questions, and I can hand it over to my colleague Reed, who will moderate any of your questions. And please go ahead and type them.
Yeah, thanks for that, Amina. We'll just stay with you, Amina, on this one. Just we need to talk prices. We saw a big move overnight in Brent and WTI, one of the largest single day moves we've seen in the post-COVID period. Do you see further upside here? Do you think we're going to get some retracement into next week? Kind of what's your view on the short-term outlook for crude prices here?
Well, it really depends what happens, but from what I can see now, that there is further escalation. I'm not seeing any signs that this conflict is going to calm down. Iran is promising that it's going to strike back. I'm not seeing any de-escalation from Israel. We haven't seen President Trump yet make any calls to Israel, despite him making a call with Pakistan and India and stopping a nuclear war there. So he might as well make a call here and stop this conflict, which hasn't happened yet. So yes, of course, there's still upside to where oil prices can go. The risk is still there. And of course, if we get a kind of extreme situation, which Hamayoun described as a closure of the Strait of Hormuz, we could see oil jump to $120, $150. That's very possible.
And actually on that point, Hamayoun, just to kind of reiterate, getting a lot of questions here around just impacts to infrastructure, so kind of let's take this in a couple of parts. First, have we seen any physical impacts to Iranian infrastructure, oil export production infrastructure so far?
No, actually, so far, everything operations continue as normal. So when it comes to loadings, it's still too early. We haven't seen any loadings take place today, but that's I would say normal from our end. Usually, we require a few more time to see those. But yeah, so far there's no indication that there's been any impact whatsoever.
And just when it comes to alternative infrastructure, if we did have a scenario where the Strait of Hormuz was closed, uh, we're getting questions around, could the Saudis increase the utilization of their East-West pipeline? Is there a lot of other optionality to try and get crude out of the region, or not? Broad question, I know.
Yeah, so looking at Saudi's East-West pipeline, they have already been making use of it, over the past 18 months, 2 years, because of the Houthi actions around the Bab el-Mandeb Strait. So all of the crude that they are sending to Europe and to Egypt, so it's roughly, I think, around 700, 800 kbd, is coming via the East-West pipeline. So I think the issue for Saudi here, in order to, I mean, that means that there is the space to increase the volumes, because the capacity is about 5 million barrels per day, and they've been using less than 1 million barrels per day. But the issue is that this brings you back to the Red Sea, and the Red Sea, then you would need to, and Saudi mainly exports to Asia, so you would still need to pass at least the Bab el-Mandeb Strait, where you also have other kind of risks with the Houthis still being present there. So if they believe that the risk from the Houthis would be less significant than from Iran closing the Strait of Hormuz, then we could see that happening. But I think that in the short term, and as Amina said, their relationship with Iran has improved a lot, and they are doing a lot of diplomatic effort in order to de-escalate what's going on here. So there's no reason to think that in the short term, at least, they would be using that East-West pipeline more. And for the rest of the countries, it's really only Abu Dhabi that has that has still a bit more, I think, capacity to use the ATCOP pipeline. I'm not fully aware of like right now on the hand of how much utilization there is there, but we could check and come back. But I think that they're already using that pipeline quite significantly already. So that spare capacity in that pipeline would mostly be relatively small.
Okay, awesome. Amina, coming back to you, a lot of geopolitical questions here. Maybe just speculate on the chances that the Strait of Hormuz could be closed. Do you think that's a possible outcome? Do you not know? Any thoughts on that?
It's a lot of speculation now, Reed. It's really
Yeah,
hard to tell,
yeah.
but I would say still it's very unlikely for that to happen. And we've seen in the past, whenever there were indications or even threats that Iran might be doing this, you would hear statements from the U.S. Fifth Fleet that they would immediately intervene and they would unblock the strait. So I think, I mean, that's of course something that we need to flag as a risk. But for now, I would say it's unlikely.
Got it. And Hamayun, could you just give us a final number for how much oil flows through the strait every day? Looks like you're muted, man.
Yeah, sorry. Thanks, Reed. Yeah, absolutely. You have it here on the right chart, if you can see it. And so that's about 15 million barrels every day, a bit less, 14.6. At least that's based on last month's number.
Got it. Some questions around freight. Again, we also have a separate freight product, guys. Our head of freight is not on this call. But Hamayun, Amina, do you have, if you maybe have any thoughts, that's okay. If not, that's all right as well. Just around expectations for freight rates out of the region. Do you think that they could increase? Any thoughts on that end of things?
Yeah, I think so. I think freight rates, which have been already quite high, we expect them to stay elevated. Now, I don't have the details of, vessel type, but yeah, I think the general answer is that the actual situation here means that the geopolitical risk premium is also going to be reflected into freight costs, freight rates, especially those tankers that need to go to the region to load their crude or other products. So that should be reflected here, at least in the next few sessions.
Got it. And we'll stick with you. Another question, stick with you, Hamayun. Another question around, obviously China's buying most of the Iranian crude exports right now. Could this induce China to move away from that trade somewhat?
I mean, once again, if you look at the China buying, story from Iran, it's not a decision taken by the state, even though you could assume that the state is actually closing its eyes on those refineries buying oil from Iran. It's really down to independent refineries, which are private players. And yes, I think to an extent they could be, some of them starting to consider that the risk is definitely now too high. Some of them have already taken the decision to slightly reduce their imports from Iran because of higher risks of sanctions. Three of them have been directly sanctioned, and there's lack of clarity, why those three and not other players. And so all the players are simply wondering maybe they could be the next on the list. So that has already had an impact. I think this one, the geopolitical risk, is also going to have an impact. But I think generally speaking that the buying appetite will still remain quite strong, funnily enough. And that's because you could expect Iran's prices to decrease to entice those buyers. And also, as I said, the refining margins from these players, because they mainly have simple setups, is already quite low. So every dollar or $2 of discount that they can get, they would very happily buy the price. But of course, now it's a huge balance of, how interesting that is on one side and assessing the risk on the other. But I would expect buying appetite to only be impacted by limited amounts.
One more question for Amina, and then we will close this webinar. But keep in mind, folks, for those of you who are subscribers to Insights, you can access this presentation there and also read our full coverage on this. Amina, back to you. Obviously, you have the Trump administration watching this situation happen here. Do you think Iranian negotiations are off the table for now? Could they restart sometime in the future? Is he going to use this situation as leverage? Kind of what's your thoughts around that?
Well, before the attacks happened, Reed, I mean, there was again a lot of talk about these threats from Iran and Israel being more about posturing ahead of the talks rather than an actual attack. But we flagged up clearly in our coverage that the U.S. had given the green light to Israel to conduct these attacks in the case where they feel that the talks aren't going anywhere. And that's what we saw. We saw the attacks happen this morning. Nobody was sure of the timing, of course, but it happened a lot maybe sooner than people expected. I mean, we understand that President Trump, of course, knew about it very well. He'd given it the green light, but also the Gulf states were aware that this was happening. And they warned Iran, telling them that this is going to happen if you don't go back to the negotiating table. Now, just kind of understanding the maybe Iranian official psychology, I don't think that these attacks right now are going to be pushing them to sign a deal any faster or agreeing to any of the terms. Already they said they're not going to Oman on Sunday. But let's see what happens like further down the line. And I'm still waiting, and hopefully some of this de-escalation efforts that's happening through the Gulf states is fruitful, and we might see something result of that. But for now, I just remain very, very pessimistic about a deal being signed.
Awesome. Thanks for that, Amina. Again, we're going to go ahead and close this webinar now. Thanks everyone again for joining. We're going to really push to remain reactive to the situation going on in the Middle East. If you're not a subscriber to Insights, reach out to sales@kepler.com. And again, you can get full access to our full range of research around these topics. Anyway, thanks for joining, and we'll see you soon.